But at least in my world, a lot of the people who were buying in the last 2 or 3 years were using house money. They bought a pre-construction in 2011. It finished in 2015. They made so much money. They bought another pre-construction. It finished in 2019. They made so much money. They bought another pre-construction. So they're not as hit as hard as like a millennial who's trying to live there.
The money goes somewhere. The money always goes. It's not like the money doesn't go anywhere. These people aren't just storing their money somewhere and not investing it. They're investing in projects with you guys.
But it's the wealth gap
well,
that he's talking about.
I think there's a ton of people who just got rid of their mortgages.
Yeah, that's it.
Yep.
So they may not have invested. They might not have got the HELOC. They might be sitting on a $4 million home in the middle of the city with no mortgage.
Yeah.
I mean, my parents are an example. They had to go through a few different housing options in the last couple of years to get to. They bought in pre-construction. It's an interesting story. They had a condo in Liberty Village, and they wanted to move to Avenue St. Clair where they would like to retire, and they bought an Avenue St. Clair in pre-construction while they were living in Liberty Village. And through the life of the build, when they went to sell in Liberty Village, it was more money than what they paid for Avenue St. Clair, same size unit. So they were able to get into Avenue in St. Clair with no mortgage, and so it's great for retirement. And I think that's, do they have money? They're not wealthy. They don't have a ton of money, but now they're comfortable because they don't have to pay a mortgage. They don't have to deal with the interest rates, and their wealth is all in that condo that they have. And I think you're going to see a lot of that.
Yeah, that's how my parents are too. My parents sold their house, moved into a nice condo. It's got no debt on it, at least not now. But that's probably what a lot of people have. But they're not selling, they're staying, and they're on fixed incomes, and so they almost don't count. I don't mean to say that in a rude way, but like they're kind of over there. They're not causing any trouble. They're not really part of things. But it's the other people fine voting, which like that makes a difference these days. But they do vote, that's true. But it's the people that did take all the money out of their house since they bought it back then and lived a life that could not continue unless the perpetual upward motion continued forever and ever. I mean, look around. Like, there's a lot of people that live lifestyles that are way beyond what their paycheck should allow, right?
That could be, but I still think that's a small portion of the population. And I think it is a millennial thing too. A lot of them love to live life, which nothing against that. And they spend more than they can. And they, had a good thing going for a little while. But I do think that the majority of people, at least in Toronto, are homeowners, and they've had their homes for a while, and they, like your parents, are just sitting there, and eventually there will be a transaction when they no longer need that housing. They move to a senior's home or something, but they're just going to sit and be fine.
So TK, once again, we did not figure out the housing crisis.
We had some great articles to discuss, but like Devin's is too interesting to talk to. So we'll get those next show.
Well, TK, one thing that I'd like to maybe bring up to you, and one thing I've seen a lot in the market, people talk about the pre-construction and where the buyers are, but at least in my world, a lot of the people who were buying in the last 2 or 3 years were using house money. They bought a pre-construction in 2011. It finished in 2015. They made so much money. They bought another pre-construction. It finished in 2019. They made so much money. They bought another pre-construction. So they're not as hit as hard as like a millennial who's trying to live there, right? The investors who have been investing in this condo market for 7 or 8 years, as much as like the ones they've done in the last 2 years might not do very well, I still think they're ahead of the game. I don't know if you see that too.
100%. The issue is the people who bought recently because of this craziness. I'm running into people who bought 3, 4, 5, 6 pre-constructions, and they are like
they're holding that amount of paper
as much
now.
equity and wealth that was built from this market, we're going to watch evaporate because of some of the poor decisions that some people made, and that's true. And they're all the same type of stories. It was all FOMO. It was all like, oh, I'm going to get rich quick. And it's just, there's no book ever written on how to get rich quick. that's ever been a bestseller that, held the test of time. You know what I mean?
Or had the
at the
actual
end, someone
answer in
loses
it.
money and they say that book was garbage, right?
Yeah.
So
Or didn't
it's just
say
the way
in
it goes. Yeah. So
we do have a fund. So the Grants Capital Real Estate Development Fund, it's for RSP, TFSA, or just general investing. It's small ticket, so you can come in for as little as 25K or as much as our biggest investor is a couple $1 million. And that fund is invested already in 3 projects. The townhouse one I mentioned at Vic Park and Shepherd is one of them, and they're in 2 other, one in Pickering and one in Stouffville. And the fund will go into Darryl's deal as well. And then the fund will continue as we raise more capital to invest in more and more development projects. So I always say RSPs and TFSAs are great for this because they're long-term in nature, and the tax treatment obviously in RSP and TFSAs is pretty good. So if you're using your RSP in day trading, it's not, your RSP is a long-term thing and development is long-term, so they match up nicely. And our fund is a great way for investors to do that. Investing directly in Darryl's deals, a limited partnership, which has other benefits. So we sell both. You can invest in the fund or directly in the limited partnership.
Like, comment, and subscribe if you got anything from one of these clips. And if you want to see some more, press something on the screen here. Boom.
that was good.
That was good. I like that. That was good.